Hi there, welcome back to Meeting Now. Very good morning. You're watching Market Cafe with me, Kanishka Sarkar and Ankita Saxena. Over the next 1 hour, we'll take you through all the global cues and domestic cues that you need to watch out for. And apart from that, we'll also take you through all the stocks that you need to keep on your radar today. But let's get started with the eye on the globe. First up, let's take stock of how the U.S. markets fared overnight. Well, it was a rather positive day coming in for the U.S. markets. They kicked off the week on a positive note with the Nasdaq closing at a record high ahead of the inflation data. The Nasdaq composite rose about 0.5% to that 21,798 level, hitting a fresh intraday high as well. The S&P 500 gained 0.2%, while the Dow Jones Industrial Average that rose more than 100 points or 0.2% to that 45,500 level. On the other hand, chip stocks were the ones that led this kind of move, with Broadcom up about 3%, Nvidia rising nearly 1%, paring back some recent losses. Amazon and Microsoft, they also traded higher, supporting gains in the broader market. Now, looking ahead, investors are bracing for a data-heavy week, with the producer price index due Wednesday and the consumer price index due on Thursday. So this is the data that we'll be watching out for over the course of the week. Now, remember, these reports will provide fresh cues on inflation and also could shape the expectations for the Federal Reserve rate cut. That is the next move that's going to come this month. Now, remember, last week's weak job data that has already strengthened bets on Fed rate cut this month itself, with some traders even pricing in a half-point reduction. So that's the expectation as far as Fed rate cuts are concerned. But the next cues come from the data that is due to be released later this week. But Ankita, how are things looking on the crude front?
Yes, Kanishka, oil prices climbed on Monday, regaining some of the last week's losses after OPEC Plus output hike was seen as modest and due to the concerns of a possibility of some more sanctions from the Russian crude. OPEC Plus flagged plans to further increase the production from October, but the amount was less than some analysts were anticipating. Now, Reuters reported earlier this month that the members were considering another hike. The Brent crude climbed 52 cents or 0.79% to close in at $66.02 a barrel, while the WTI rose 39 cents or 0.6% to settle in at $62.26 a barrel. Now, both benchmarks fell more than 2% on Friday as a weak U.S. job report dimmed the outlook for energy demand. Now, it lost more than 3% in the last week. So they seem to be inching up a little from the losses that we saw coming in the last week. So that's where crude is really hovering at.
Alright, so that's about crude, but let's also put the spotlight on how gold is faring. And Ashesha is here to take us through just that. Ashesha, another day, another record high for gold.
Indeed, another day and another record high for gold. In fact, it is gaining for the third straight day. It is now trading near that $3,640 per ounce mark. And gold has risen nearly 5% in the month of September so far. So that's the kind of up move that we have seen in gold prices. Now, the prospects of rate cut have risen after the jobs claims data that we got on Friday from the United States and 25 basis point rate cut in the month of September from Federal Reserve in the meeting that is scheduled to happen next week is highly certain. In fact, traders are also penciling in 3 rate cuts for the rest of this calendar year, and this is precisely the reason prospects of rate cut have risen, and gold, being a low-yielding assets, continues to gain in the global market. Now, if you look at the yearly moves, remember, so far this year, gold has risen 37% following a 27% uptick that we had seen in the last calendar year. Escalating geopolitical tensions continues to remain one of the reasons, because of which safe haven demand continues to resume in the global market, and strong demand from central banks globally also continues to remain a concern. Remember, despite the up move, brokerage houses continue to remain very bullish. Goldman Sachs has given a target price of $3,640 per ounce. This is by the fourth quarter of this calendar year. JP Morgan at 3,675 and Morgan Stanley at about $3,800 per ounce. But since we are talking about the kind of action central bank has seen over the last few years, let's also put the spotlight on latest US Treasury Department data, which says that India's investment in treasuries has slipped to about $227 in the month of June, which is lower than what we had seen in May and lower than what we had seen in June last year. But remember, Nirmala Sitharaman also clarified that India's gold reserves continue to inch higher, and India's treasuries are being diversified across several asset classes globally. Remember, India's reserves stand at about $694 billion, which is the fourth largest in the world. But yes, gold continues to trade at record high levels, now trading near that $3,640 per ounce in the global market.
All right, so that's how the gold prices are moving. Glittering away to glory is where gold is at. But let's move on then. French Prime Minister Francois Bayrou has been ousted after losing a confidence vote in Parliament, a motion he had called himself. Now, Bayrou's centrist minority government failed to rally support for its 2026 budget aimed at cutting France's soaring deficit. Now, the defeat leaves President Emmanuel Macron searching for a new leader, France's fifth Prime Minister in under 2 years. Political gridlock continues to grip Europe's third largest economy as parties on both left and right resist Macron's spending cuts and tax hikes. Japan also may soon see its first female Prime Minister, with Prime Minister Shiregu Ishiba stepping down. The race for leadership for the running LDP is heating up. Sane Takachi, former Economic Security Minister, currently leads in the polls with 23%. If elected, Takaichi would break new ground in a country where women's workforce participation now exceeds that of the US.
Next up, the US Supreme Court has sided with President Donald Trump's immigration crackdown, allowing federal agents to resume aggressive raids in Southern California. The court's conservative majority lifted a lower court order that barred agents from stopping people based on race, ethnicity, or language. The liberal justices blasted the ruling, and California governor condemned the decision as a parade of racial terror. Next up, the Trump administration says it has launched Operation Midway Blitz, an immigration enforcement push in Chicago and Illinois, citing the state's sanctuary laws, but details remain murky, with governors saying that they've learned of the move from social media, not federal officials. The administration has hinted at possible troop deployments through, though Monday's action resembled earlier immigration raids, not military intervention.
And the real-life succession saga is over. Eicher Motors will take control of the family's media empire, including Fox News and the Wall Street Journal, after a settlement with the siblings. The deal ends years of uncertainty over who would inherit Rupert Murdoch's legacy. Under the agreement, siblings Grace and Chloe Murdoch, along with their brother, will cash out, each pocketing about $1.1 billion from share sale. And Chinese EV maker Xpeng is gearing up to take its budget-friendly Monarch brand global in 2026. CEO He Xiaoping said in an interview, the move could shake up Europe's cars market, where traditional automakers like BMW, Mercedes and Volkswagen are already under pressure from Chinese rivals. Xpeng's Monarch cars, priced under $17,000 in China, will intensify competition with Tesla, also losing ground in the region.
Next up, a new bill by a US Republican senator, if passed by policymakers, is set to disrupt the growth of India's growing services sector and threatens the cost of advantage enjoyed by service providers, especially in tech sector. Now, the bill introduced by the Ohio Republican Senator Bernie Moreno is known as the Halting International Relocation of Employment Act, or the HIRE Act. It aims to slap a tax on U.S. companies who outsource jobs overseas. Now, the HIRE Act proposes a 25% tax on outsourcing payments, while experts are of the view that the bill is unlikely to pass in its current form because of the strong U.S. corporate interest in Indian outsourcing. The bill could be detrimental to India's IT and services sectors. In fact, we caught up with Dr. Ganesh Natarajan, who is the executive chairman of 5F World and GTT Data and former chairman of NASSCOM, to understand what this really means for India's services export industry. Let's take a look.
Tax like that is imposed and you see a slow dwindling of work coming to India, then you will have to retrain people not only in our Indian centers to move abroad, and then of course there will be the double whammy of visa tightening that's already being talked about. So there are, I mean, it's almost, as I said, the doomsday scenario can go further and further and further, and you can just get stuck into a quagmire of lots of problems everywhere. But if that happens, I think we're prepared, because most Indian companies have centers outside India. I mean, there are a lot of American centers that most of the large companies have. So it's just a question of scaling up, scaling down, doing what is appropriate, looking at where value can be delivered better, if there is a new restriction on how value can be delivered from India. So all these hypotheses we can always draw. But as I said, at this point of time, there is no doomsday scenario. So I think we should be better off just waiting and watching.
And well, let's go across and take stock of US markets. Anurag Singh, despite tariff concerns, he says Indian investors remain rather bullish on American equities. Let's take a look at what he had to say about it.
In terms of US investors, there are too many other avenues where there are things to worry about. What is the Federal Reserve stance? What will be the government regulation going forward? And all those are much bigger worries for now for the US economy. In any case, US economy is looking too strong. Growth last quarter was 3%. It continues to chug along very strongly. And I think US is pretty much looking for a very bright future locally. So investors generally have become now more bullish on US vis-a-vis last 6 months, at least first 6 months of the year, where the impression was that US might underperform the US market, the European or the emerging markets. Now the trend is back to US, right? And that's reflected even in the FII money exiting India on a continuous basis.
All right, so that's about India's IT export services and how it may be impacted if that higher act comes into play. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side.
Remember, the global markets, at least the US market, did well in the trading session, especially NASDAQ, that is hitting fresh record highs on the back of the renewed interest in the AI and the chip stocks. And on the back of that, we do see Asian markets also doing well today. In fact, if you look at Japan's benchmark and Nikkei, that jumped 0.9% to a record high, notching a second straight day of gains after the country's Prime Minister Shigeru Ishiba announced his resignation on Sunday. And Japan's Nikkei even crossed 44,000 to hit fresh highs, extending the rally after the resignation announcement. It has moderated for now. It is trading with gains of 0.6%. But we also see ASX, S&P ASX, that has turned red right now. That is trading with cuts of more than 0.5%. But besides that, we have other indices that are doing well. Hang Seng is trading with gains of 0.3%. Kospi is also up 0.4%, almost 0.5% uptick coming in on Kospi. Shanghai, however, is trading with a downtick of 0.1%. It is marginally in the red, but ASX and Shanghai are the only indices that are trading in the red. But besides that, we do see a green coming in on Hang Seng, Kospi and Nikkei, especially the Japanese markets that are doing pretty well today. And Nifty also seeing an implied start of 41 points.
That's right. So we are expecting a start off, with gains of nearly 40 odd points for the Nifty. But here's a quick look at how the markets fared yesterday back home, that is Street. In terms of benchmarks, Nifty and Nifty Bank, they closed with slight gains. On the other hand, mid-cap and small-cap indices, they were the ones leading. They advanced for the second straight day. Now, let's take a look at how different sectors performed. First up, auto, that was the top sectoral gainer. On the other hand, PSU banks, they advanced for the second straight day. Meanwhile, Realty wasn't doing as, Realty also came back to the green. In fact, it snapped its two-day losing streak. On the other hand, metals, they closed in the green for the second straight day. Now, talking of losers, IT was the top sectoral loser. On the other hand, pharma stocks, they also closed in the red, whereas FMCG, that continued its fall for the third straight day. So it was a mixed bag with the Nifty IT, pharma and FMCG. They were the ones that ended the day in the red. On the other hand, Nifty Auto, PSU Bank, Realty, they were all trading in the green, with Nifty Auto leading the pack with 3% of gains coming in. So that's how the markets fared yesterday. And today we are expecting a positive start yet again.
All right, so those are the cues you need to keep on your radar. But what are the stocks to watch out for before the start of the street today? Ashesha is here with all the stocks and news. Ashesha, take us through that.
Well, yes, first up, let's start with the auto sector. Remember, the sector was buzzing in trade yesterday as well, and TVS Motors in particular, where the company said that they will cut prices with effect from September 22. So TVS Motor in focus on the back of that. GCPL, meanwhile, the company says that company's Indonesian arm has commenced construction for setting up new manufacturing facility. The project will involve an investment of about 250 odd crores. So some new investment coming their way, on the back of which this stock will also be in focus. Railtel, meanwhile, positive news flow on the back of order wins, where the company said that they have received orders worth about 700 crores, and this is from Education Council of Bihar, so keep an eye out on Railtel as well. Meanwhile, gold financiers, the likes of Manappuram and Muthoot, will also be in focus. Remember, gold prices are yet again at a fresh record high. In fact, in the global markets, they have now crossed that $3,640 per ounce mark. They've risen nearly 5% this month so far. So that's a kind of up move that we have seen in gold prices. So both these gold financiers, Manappuram and Muthoot Finance, will be in focus on the back of that. Lastly, let's also talk about Adani Ports, where the company said, or rather Israel and India have signed an agreement to bolster bilateral investment. So positive news flow perhaps we could see over the next few years. Adani Ports in focus on the back of this.
Right, thank you, Ashesha, for taking us through that list. But Sharad, you also have a couple of counters on your list, starting with Infosys. Take us through the details.
Interesting development coming from the IT space, as Infosys stated that the company will consider share buyback on board meeting on September 11. Now, this would be the fifth buyback coming in from the company since its listing. Up next is Nuvama also, where agencies reports suggest that PAG's Nuvama stake sale is expected to be slowed down due to the impact of Jane Street case. Also, as per the agencies, that there are talks with the prospective bidders are ongoing, and PAG may also explore other options for its holding in Nuvama as well, including a placement or a continuation fund. Also, RB Infra strong toll collection numbers coming in the month of August, as the toll collections grew 12% on a year-on-year basis. HUDCO, there's a positive news flow coming in, as they have signed an MOU with the Nagpur Metropolitan Region Development Authority in Maharashtra. And lastly, Strides Pharma would be in focus, as the company has entered into a strategic product development partnership with Kinox to expand nasal spray portfolio for the US market.
All right, so those are the stocks that you need to watch out for. But a couple of cues also to keep on your radar, and for that we are joined by Rabinder, who is taking us through all the cues you need to watch out for. Rabinder, take it away.
Well, yes, on September 9, Nifty weekly expiry is scheduled to be held, and apart from this, several other companies including BLS International, Dilip Buildcoin, RBL Bank, GSFC and Steel Authority of India will trade their ex-dividend on September 9, and it is also last day to buy shares of Astra Microwave, Campus Activewear, Force Motor, Gujarat State Petronet and PNB Glitz to be eligible for the dividend. And apart from this, on September 9, some of the EGM is scheduled to be held for like 5-star Business, Deepak Fertilizer, GNFC and VIP Industry on the same day. And among global events including ECB Governing Council member Frequois Villoy de Galejo is scheduled to be speak. And lastly, Apple is expected to unveil its iPhone 17.
Alright, so quite a few cues to watch out for later today. But on that note, we'll take a very short break. We'll be right back with more news and updates on the other side.
Looks very positive to me because of all the things that we are seeing. The location where you are strategically placed in Indian Ocean, through which so much of trade happens. The diversification that has happened in terms of relationship, which once again underlines concentration risk, whichever way it is and wherever it is, should be immediately taken away. And the consumption growth story of India, the rising middle class, the realignment in global policies, and the reforms in the form of GST and whatnot, clearly makes that 7.8 is here to continue and more to be seen.
And moving on, then, the finance minister made it clear that India's economic growth is a result of continuous reforms, and the country is now on track to becoming the third largest economy by 2028. In an exclusive chat with Times Network, she also acknowledged the challenges posed by the global uncertainties. In a slice of that interaction.
It is because of the toil, sweat and toil of our common people. Government at best comes up with favorable policies, and at best comes up with ecosystems which can be created to help everybody who's doing his business. And therefore, economy going fastest. I thank people of India. Inflation coming down because of the various supply chain bottlenecks which we removed. It's going to help the people down there who are supplying goods, buying goods, and as a result, inflation comes down. Eventually, if we think that we sitting in the opposition are driving the country, I'm sorry, there are times they've driven almost towards chaos, which because there's a responsible ruling dispensation across states, the country is still on, as you say in Hindi, patri mein ja rahi hai. So let me also ask you the question. Rahul Gandhi said and echoed what President Trump said, that India is a dead economy. How do you respond? I feel sad. I really feel sad, because doesn't he have his own assessment of the Indian economy? Doesn't he have an assessment of what is the actual situation in the ground? And can he not articulate it in his own words? I'll give all ears to it. To Rahul Gandhi? Yes, if he speaks in his own words, that is. If he borrows... उसी के words हैं, Gabbar Singh tax. नहीं, वो dead economy. Dead economy. My point is, can you not borrow words from, however big or small the leader or political whoever it is? Why do you have to borrow? Don't you have an assessment of what Indian economy is? Don't you know where the Indian economy is going? And don't you see that it is the fastest growing economy? Don't you see that it is sooner going to be the third largest economy?
All right, so those are the comments coming from Finance Minister Nirmala Sitharaman. Moving on, External Affairs Minister S. Jaishankar has stressed the need for fair and transparent economic practices that benefit all amid Donald Trump's tariff threats. Now, speaking at the virtual BRICS summit, he highlighted that the group should focus on building a more resilient supply chain, especially at a time when multiple disruptions are affecting international trade. Let's listen in to what External Affairs Minister S. Jaishankar said on the free trade at the BRICS summit.
The world requires constructive and cooperative approaches to promote trade that is sustainable. Increasing barriers and complicating transactions will not help. Neither would the linking of trade measures to non-trade matters. The BRICS itself can set an example by reviewing trade flows among its member states. Where India is concerned, some of our biggest deficits are with BRICS partners, and we've been pressing for expeditious solutions.
And well, the insurance sector may be looking up after government's decision to bring GST on health insurance products down to zero. But the loss of input tax credits in health insurance could mean a 3 to 4% hike in the health insurance prices, according to the MD of Chola MS General Insurance. Now, however, in an exclusive conversation with ET Now, Surya Narayan told Jude Saneth that This would still mean a net benefit, all of which would be passed on to the customer eventually. Let's listen in.
See, the individual health premium size in the industry, even if you were to include the SAHI players, is about 50,000 crores. 18% cut means that about 9,000 crores of money is now available with the policyholders, and I'm only counting those who have bought the policies already. This 9,000 crores is now available with them to spend on other things, either on health insurance or other insurance or for consumption. I think that's a lot of money. I'm sure the insurance industry will compete with the other industries as well for the share of pie of this 9,000 crores. So overall, that is a big positive. Yes, the fact that you mentioned about the loss of input credit is real, and that loss of input credit essentially emanates from the commission that we pay to the agents for procuring the premium. If the government were to relax the GST on the commission, as they have done for reinsurance, I think it will be a double bonanza, which can then mean that the total benefit will and can get passed on totally to the policyholders. If for a reason the government has its reservations in retaining the input tax credit as a charge to insurers, it can mean that there is a cost push to the extent of about 3 to 4%. But then again consider that there is an 18% drop. There may at best be a 3 to 4%, but still that 15% benefit to the policyholders is for real.
Right. So help put this in perspective then. Should the conditional situation wherein the input tax credit be done away with, does not quite happen, then you will see, of course, a 3 to 4% hike, like you said. But the fact remains that the 15% benefit by way of the GST reduction, that remains. So net, you will see a benefit to the customer.
See, this is a benefit that is being given by government to policyholders. I don't see any reason why the insurance industry will put its hand in the till in denying this benefit to the policyholders.
All right, let's shift focus to the Q-commerce space then. Now, GST changes came in at the right time and will spur consumption. That's the word coming from Amazon India head Samir Kumar. In an exclusive conversation on ET Now with ET Now's Sumita Karish, Samir Kumar spoke on the impact of GST reforms on festive sales, plans for quick commerce expansion, and target for exports from India. Here's an excerpt of that conversation. Let's listen in.
I think like even before that, our focus, if you look at where are we expanding our network, Tier 2, Tier 3 cities have been focused, like if you like Hubli and Vizag and Kochi are some of the cities that we are building or expanding our network into, because we didn't have very fast delivery to those cities. So we are going to expand that. So even for Prime Day, for example, most of our new Prime customers that we signed up came from these smaller towns and cities. So we are seeing adoption of e-commerce and people coming online and shopping online across the country, especially from Tier 2, Tier 3 cities. In terms of GST changes, we are really excited about, like it came at the right time and hopefully it will spur consumption. But we are also very hopeful about how it's going to help the seller. The GST Council met. There's not just about the reduction in the rate, the slab rate, but also how much the government has listened to us around, let's make the life of selling online easier for all our sellers. So if you go into the details, there's so many of those changes that we are excited about, which will make the life of a small, medium business selling online much easier. And I'm really excited about the long-term impact of those changes.
Right. So when we talk about Amazon now, which is essentially a quick commerce platform, this is the new baby, new kid on the block. And I think all the companies, they want to sort of make the maximum out of. There are incumbents, there are new companies as well. But in terms of your expansion, I believe that the Bengaluru pilot is no more a pilot, it's fully functional. And so is the Delhi, project, that pilot.
Yeah, I would not, we were never in a pilot. We were making sure that the first stores that we launched, they worked really well. We always take a customer backward approach. We had to make sure that things were working well. So we spent time honing that. And once we did that, after that, it's a hockey stick. We are expanding very rapidly. And some of them, like we are launching stores every day now.
Okay.
So these micro fulfillment centers are getting and as soon as a small FC or the mini FC or the micro FC is ready in a neighborhood, we light it up. So stay tuned. Like if you don't see Amazon Now icon on your app, hopefully in the coming days in Delhi and Bangalore, you'll definitely see that. But it goes beyond that. It's going to start going. So it's not just Delhi that we are talking about. If you live in Gurgaon or you live in Noida, so it's entire NCR that we're going to cover, and it's going to happen very soon. Like we are, and stay tuned for rest of the country as well.
What are the timelines? What are the timelines that you're working with? And which city is going to be next on your radar as your priority
we can talk about that right now.
Because Bombay is feeling left out. Mumbai is feeling left out.
So we'll have the plans for all the cities. Stay tuned. You'll see all of that happen very quickly.
And well, that's the Amazon exclusive that you can catch. But let's move on then. The GST changes that came at the right time that will spur consumption. That is the word that came in from Amazon chief. Let's move on to some other news that's developing. Nearly 20 people who were killed and over 100 that were injured in clashes with security forces after thousands of youth in Nepal took to streets yesterday to protest against corruption and a government ban on social media websites. Now, meanwhile, Nepal's Home Minister has resigned, taking the moral responsibility for the deaths during violent protests in Kathmandu. The visuals, as you can see on your screens.
All right, moving on. The vice presidential polls are set to take place today with the INDI bloc candidate B. Sudarshan Reddy all set to face NDA pick CP Radhakrishnan. And the process will commence at 10 a.m. and close at 5 p.m. today. Prime Minister Narendra Modi will be the first voter to cast his vote in the vice presidential elections. The counting of votes will start by 6 p.m. It'll start at 6 with the electoral college consisting of 233 elected members of the Rajya Sabha, 12 nominated members of the Rajya Sabha, and 543 elected members of Lok Sabha as well. Now let's go across to my colleague Tetri, who's joining us with the detailed update here.
If we talk about vice presidential elections, then the elections of the vice presidents that are held that are quite different from the normal elections that are held, because it contains ballot paper, and it is not just that you have to stamp or tick only on the one candidate. There is a sequence in which the MP have to tick. So if suppose A candidate he has to tick and then the B candidate according to his preference, and that is why here the transfer of vote becomes very important. If we talk about the number game, excluding all those seats, that are 7 seats from Rajya Sabha and Lok Sabha, excluding all those seats, then the total number of seats will be 781 if we talk about the number game, and 391 will be the magic number. And as of now, when we are talking about the magic number, definitely the NDA is getting the numbers above the magic number. The reason being that yes, it has more MPs, and the parties who are not also the allies of the NDA of the NDA, they are also supporting the candidate of the NDA.
All right, moving on then. Prime Minister Narendra Modi will visit Himachal Pradesh and Punjab today to review the flood-related situation in the states. He will undertake an aerial survey of the flood and landslide hit areas.
All right, so that's about the national updates that we are picking up. But let's take stock of how the Asian markets have settled in. First up, let's put the spotlight on Japan's Nikkei. It's trading 100 points higher as we speak at that 43,754 level. On the other hand, we have Australia's ASX 200 index, which continues to trade in the red, down about 0.7% as we speak at that 8,780 odd level, 8,880 2,800 level. In fact, on the other hand, Hong Kong's Hang Seng Index, that's the one that leading gains on the in the Asia Pacific segment. It's up more than 260 points at this point, up more than 1% at that 25,948 level. On the other hand, South Korea's Kospi Index, that's also trading in the green, up about 0.5% at that 3,237 level. And apart from that, China's Shanghai Index, that's also trading in the green. It's nearly flat, just about 0.1% higher, but continues to trade in the green at that 3,830 odd level. So that's the move that we are tracking as far as China's Shanghai Index is concerned. On the other hand, the Nifty, last we checked, it was the implied Nifty was suggesting a start about 41 points higher, but now as we can see, it's showing an uptick of nearly 58 points, so 0.2% gains we could be seeing at the start of trade on the Lal Street today. So that's how Asia Pacific markets are faring as of now.
So that's what Asia Pacific markets look like, and we're also expecting a positive start of almost 60 odd points on the Nifty. But speaking of the market, Mark Matthews, head of investment research, Julius Baer, shares his outlook on India. He believes that there is a lot of interest in India and believes that the Indian economy is likely to be better over the next year. Let's listen in.
Well, I think there's a lot to be interested in India. It is a very large and liquid market, which most emerging markets are not. So you can easily get in and out. And it is a very large and uncorrelated economy to the American economy. So to my mind, it is a natural place to invest. Yes, they're a good proxy for the economy as a whole, not just consumption, but I like to say that banks are the heart of any economy. And so when the economy is doing well, the heart is doing well. And I believe that India's economy will do better in the next year or so. I've been thinking for some time that the IT stocks are too cheap. So if you look back in history, for some strange reason, IT and banks tend to do the opposite of each other. So when banks perform well, IT doesn't perform well, and vice versa. So we know that banks have been very good this year and IT has been terrible. I believe we're reaching at some point of inflection. I earlier just told you that I like banks, so sort of contradicting myself. But when stocks are down more than 20%, you should start taking an interest in them. And the IT space is down 20% from the beginning of the year. The one thing that pops in my mind is that China is taking up a lot of the bandwidth that is occupied by the emerging markets.
All right, let's shift focus to the auto sector then. Now it's raining price cuts in the auto market ahead of Navratri. Tata Motors has slashed prices across car and SUV range by up to 1.5 lakh rupees. That's effective September 22nd when the new GST slabs take effect. We caught up with experts to decode the same. Let's listen into what they had to say about the price cuts.
I really appreciate some companies who have actually come forward and who are trying to share the burden with the dealers. I think it's a great way to go, but not every company has come forward, which means that the dealers need to bear the brunt of this compensation cess, which I think is extremely unfair. We've been talking about 21 days inventory in FADA for the last more than a year. And manufacturers have been dumping vehicles on us, which have gone to 55 days, in certain cases up to 3 months. So we are not the ones who ask for the stock. The manufacturers have put the stock on us. So the onus also is on them to take the burden, the majority of the burden on this, or the stock and the cess available therefore, and help the dealers out.
So there are some OEMs, but very rare, who are coming forward and giving customers the benefit of GST cut even today, which is 14, 15 days before, so that if they have interested, they can buy that and it will help us reduce the inventory with us. It's a turnover game, not a per vehicle margin. We work at a very low, thin margin percentage. So covering 10% for any of us is difficult. So it's a joint effort where we are trying to insulate ourselves with this cess is a mess thing. But let's hope that things change with the government coming up in 2-3 days or 4 days of our follow-up on this.
All right, let's go across to my colleague Snehi now, who's standing by with all the brokerage notes and all the stocks that you need to watch out on your, keep on your radar on the back of brokerages. Snehi, take us through what the brokerage notes are saying.
Well, absolutely. Good morning. Lots to watch out for on the brokerages front. First, let's talk about CESE's Investors Day, and we have antique note on that, wherein they've maintained their buy rating, target price at 203 rupees per share for CESE, and they say that the Vision 2030 of the company targets 15% PAT CAGR, so that's important to watch out for. The management has reiterated their strategic focus on expanding in renewables and distributions, and they've announced plans to invest roughly 3,000 crore rupees in the 3 gigawatt solar cell and module manufacturing capacity. So that is also going to be important. They've guided for a capex of 3,000 crores for the next 5 years, and they expect to deliver 15% PAT CAGR over to FY25 to FY30. Then antiques note coming in on First Source Solutions, wherein they've maintained their buy rating, target price at 420 rupees per share. They see sustaining industry-leading growth for the company. The management has expressed increased confidence in the company's business outlook, driven by a strong deal momentum and healthy pipeline visibility for FY26. They've also reiterated confidence in achieving revenue growth guidance of 13 to 15%. Then antiques note coming in on Ujjivan Small Finance Bank, their analyst meet, wherein they've maintained a buy rating, target price at 73 rupees per share. They believe the bank is transitioning towards a secured and scalable franchise, and they're targeting more than 25% CAGR in loan book over FY25 to FY30, and they aim to scale up their portfolio to 1 lakh crore by FY30 as well. Let's also talk about Nuvama's note coming in on Century Plyboards, wherein they've maintained a buy rating, but the target price has been hiked to 901 rupees per share from 849 earlier. They believe the leadership and aggression of the company continue, and the volume growth guidance of 10, 20 and 40% for their plywood, laminate and particle board business, that continues to remain intact. So that's a list of all the stocks you need to be watching out for on the back of some brokerage action coming in this morning.
Thank you, Snehi, for taking us through that list. Lots of stocks to watch out on the back of brokerage notes that have come in this morning. But with that, we're completely timed out on this edition of Market Cafe. Ankita and I will take your leave, but don't go anywhere, as the market will take all the action forward.